Hi, hello. Welcome to another ES Futures Trading stream. Today is Thursday, April 27th. It is 8:51 a.m. We have just had GDP number, like about almost 20 or almost 20 minutes ago. It is, it was, it was less than expected, and the market gave us some spike. You know, it's back to the upside, but higher prices were rejected almost immediately. But what I got from this profile, from the overnight profile, is I'm talking just about the number, okay, before doing anything. Now notice where this low is. I'm going to put a line here. Boom, where that low is. Exactly a half back, okay? Just exactly a half back. So very, very short-term traders here. It is unlikely that this low here, uh, or it's highly likely that this low is going to be revisited. This level has high also been revisited. But first things first. Yesterday we have a break. You know, the market re-enter. Market break out of this 17-day range. We don't have a market here. Let's do something with this level to differentiate from another ones. Maybe let's do it dash. All right, 17-day range low here. Um, it got below, closed the gap, was bought somewhere in here, and it was bought exactly at the weekly support. From the moment that the market was bought here, there was a weak level here. This was a long, taking uh, taking out the short inventory. That was a counteraction to the 100% long inventory from the overnight, from this overnight. It got, or it was sold, it was sold it was sold from the high of the lower distribution. And one time frame it did not end it here. Actually, by ended early in the session here, it increased the odds of having a rotational market. And it took the high. It couldn't take the white overnight POC, and this was short here. And the market just back after. The rest of the day, we just have a break. Took this low, very mechanical trade here. It was really hard until this point. Somewhere here, I ended the day. Believe it or not, I ended the day negative. It was, um, and what happened to me? Gosh, what happened? What I did, I tried to trade is futures instead of options. And this is just breaking my own rules. What do I do? What do I do when volatility is increased? When volatility increases, I use options actually to reduce the risk. But I decided to try to use futures. I was constantly being stopped, and it was a bad day. I thought, these are the days when you don't follow your plan, and they just it was bad. It was bad. And the inventory yesterday's session at this moment in time here, in I, there was a clear, there was something really clear. We were having a really nice break here, selling the rally, selling the rest until I happened. very high happened. This started from exactly half back of the day. It was daily half back at the time. Break took, well, this is an opportunity to go short here, another opportunity to go short. But it was happening all the time. It was happening every single time here. This one, this one, this one, this one. You know, one after another one. Double lows, double lows, double lows, double lows. It left. It gave us a, you know, the base was weak. Why I say it's weak? Just because the traders who are conducting most of the business here are very short-term trades here. It was reflected here again. And when laggards started to enter, the market was an L high. Once one part here, this could be the last part of the trade, and finally got here. This is when the market started to become short, and there was a lot of activity here. You know, traders were pushing and pushing and pushing below, or trying to get below the 40.70. They got one and then tried to break the market again, and they couldn't. And the market was too short. And sometimes the market needs to rally before it breaks again. And from here on, it was just short cover. We have up to this point in the overnight, was just short covering, but very similar to the previous night. But after that, the market started to have some extension to the upside. Can you see the extension to the upside? All right. And notice the volume. It was 150, almost 190 here, up to GDP release. Okay, well, it seems like we're going to have around 300, something like that. This market is having upside extension in the overnight session. Remember, just the overnight session. Overnight session are the weakest of trades. And what 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 I care the most in this, what's most important to me from the overnight is this level here. This one. This is a spike low. This is the low or the low of the spike. In the way how this number it got to the outside, price was rejected, and then it just come. And it was bought from exactly half back from yesterday. This if the market doesn't come, I mean, this is something. This is the market setting up for something later. It don't necessarily has to happen right away today or at the opening because something we will see something on the weekly on the bigger time frame charts. Let's take a look at the bigger time frame charts. Okay. Uh, Before that, this look at what's happening. What is happening to crude oil? We have a big gap was sold for 200. Now all these loans are being have been forced to liquidate. Notice how you have this how you have this 1, 2, 3, 4, 5 like five lows here, right? This is I think this is the another counter that has started and now is taking back all the gains. I don't follow this market. I don't know but I see the formations here, right? All of these loans have been forced to liquidate. This is loan liquidation here. The dollar is getting dangerous highs here. No, this is all-time low in the dollar. It is a triple low here. Not a good low though, but notice what happened here to the upside is happening here to the downside. Notice how weak these levels are. 1, 2, 3, 4, right? This is a good also market can take this one high, or we can break and then take this low, repel these ones, and go to the upside. Who knows? Nobody knows what's going to happen. But the odds, right? Those are those are the odds for that market. I think it looks like the bond market. Oh, he didn't close the gap. It almost closed the gap. We have two gaps in 10. and the 30 has closed the gap here. This is not a good high. And gold again below 2000. Okay, let's go back to the higher time frame charts here. And, the monthly has looks like has made a decision here. We have only 2 more days to end the month. Okay, uh, it is relatively close to the go no go level here, like 4140. Remember, multiple times the market has been sold. Now again, the market has explored above this level and now it's having a breakout. You know, this could be a breakout. Right, look above and fail, right? It's a breakout rejection. You can market can target this low, but as I say, it's too late. We have only 2 more days. The market can very well end up here or have some upside extensions here. It is not that far actually. Okay. We will see also the conditions on the weekly and the daily. Again, understand a little bit better here. Now, the weekly has something, I believe, you know, we it had a breakout. I consider 4082 breakout, but there was something closer. This was fierce. This is 4072. The market was bought at that level. This is the weekly breakout, the 42322 high, and it was bought. This break yesterday was one of those days that when the market, you just saw the market breaking. It looked like never was going to stop going lower, right? It finally reached this one mechanically, something expected. Traders were buying, start to buy here heavily. Have not a good level to be a buyer exactly at this level here. Then held back, which almost coincided with this level as well. Um, and the market is back to that level. It's back to the what I was looking for here was how this level, if we were going to have a test here. The market has looked below the range, has take the range out, has looked below the range, and now the question is this market going to have downside continuation, or the breakout is going to be rejected? Downside continuation targets this low, has this low as ultimate destination, which is 3980. Breakout failure, it seems far, but it's not actually that far. If volatility increases, this could be easily come down to here. Uh-huh. And look at this, right? It is the same distance to the upper side, so it's not that far. If the breakout fails, the destination trade, the ultimate destination trade is this high. Now, being this a weekly time frame, this would be if the market can get to this high, can take this high. This would be an unbelievable rejection of the breakout. The market will leave a gigantic excess on the lower side, and it will be very positive for the market if that happens. It will be extremely positive. We will have an incredibly good market if that happens. But that's the odds of that happening also, you know, uh, that's, can you see that we start to thinking in another level, right? We go from one level where we start to see what could happen, or what are the scenarios, or what are the odds that something happen, but what the market requires to do that, and what do that mean? Not just because this is a potential trade, but what will be required to do that, right? To take that high back daily. Okay, We have this event. We were talking about how weak this market was in the last couple of weeks. Yeah, the 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 weakness of the structure that is holding the market. We have this range now. This is a 17 or 16 or 17-day range. I consider this low range, which is, yeah, and this one the breakout. I have one breakout here because very close, and then upside continuation taking this low, closing the gap here, and taking this high out. It did not take this high and gave us a range. Extremely weak support. Notice what is behind this. I mean, below this level here. What is below this? There's nothing there. That's why I say it's weak. There's nothing here. Absolutely nothing here. If the market comes back to the upside, it may find resistance here. Because the market has stayed back and forth, back and forth, back and forth a lot of times you know, through this range. So there could face resistance here in its way to the upside if the market goes up here. All right. Remember the weekly, the potential to the upside. If this breakout fails, what do we have in the upside? What the market is doing? The market has repelled this low, this week low. We got 1, 2, 3, 4 weeks. I mean, 4 lows, 4 daily lows. Extremely weak scenario. Potential for firecracker effect here. Took the market to the downside and took also these lows out. You know? When the market was up here, the market was doing this. Oh, okay, I must started to think, boy, this could be an scenario also with the end of the month approaching, right? We're really close to the end of the month here, just a couple of days, less than a week here. Um, Traders could have been selling naked options here, naked puts here, maybe aiming to this low or maybe aiming to this low down here. The only thing, remember, the only thing a trader needs for a market, to keep their premium. The only thing that they need is, the market has to close below or above, or not to take. If they sell the puts here, the market just needs to close above this. That's the only thing they need to keep the premium. But if somebody sold the market, you saw naked options, naked puts up here. These ones, they are underwater here and praying. Okay, the only thing I need is the market to close just above this. Okay, just above this. This is when they start to happen. Also, at this moment in time, okay, it's not crazy to imagine, traders thinking, you know, non-sophisticated traders think, okay, this is the 4200. I'm going to say, we're so far from 4200. I'm going to sell some calls here, some naked calls here. That's a really dangerous strategy. It has high percentage of wins. It really does have that a huge amount of wins. But the thing is, you need only one lose. Okay, you need only one losing trade to lose all your gains that you may have throughout your career that can span decades, and it has happened, right? It's not crazy to think of that, and not just the earnings that you may have had, but also all the capital in your account, because it's there. Once you are underwater, just imagine selling these puts here when the market was up here, going to the upside. Now you're underwater, even though it's far. Now you are underwater, but you are not underwater by little. Okay, this is a huge amount because these traders tend to sell options in huge in big quantities. They don't sell one or two; they sell 10, 20s because the premium is small, right? And the money they do is hundreds maybe. If they lose, they will lose thousands or tens of thousands in one trade. All right. So that could be the scenario that could be for that may be happening here, and it can go in both directions. So you know, puts, naked sellers get squeezed here, and then just the opposite side. Remember, end of the month tomorrow. We also have CPE tomorrow. We have Amazon today at the closing. There's a lot of things, and we got FOMC next week as well. It's not uncommon before these big events. You got FOMC, especially FOMC. When the market heads to the downside, and then we have a rally, a big rally, which heads to the upper side. And when the event comes, the market, I won't be surprised. Okay, I won't be surprised if the market comes back to the center of this range, pretty much the center of which is almost the center of this range as well. Is it? Huh. Let me see. I have just had that curiosity. Is the center of this range? No way. No way. No way. Can you see how crazy these markets are? Look at that. The center of this range is the center of this range. No freaking way. Oh my God. Now, this is a sign of who may be trading this market, right? I got this range when the market, this half when the market started to go to the upside here, took these highs out, the weekly and the daily breakouts. Man, this is not coincidence. Yeah. You can use this kind of information in the future just to identify who's doing the trade. What your odds. It's a way. Can you see that there is something that you can see there, actually, right? And who can be that? You know, if you and me try to do that, we won't be able to do that. But more likely, algos, programs uh, that had that these programs, there are humans behind those programs, right? This is when big companies or daily time frame, not the short term, not the intraday, but daily time frame traders. These are companies with huge amounts of capitals, billions, offices, family offices, and all that stuff, hedge funds, and but they don't trade. They are persons, but these persons have emotions, and just to get rid of the emotional part, if they have a vision of the market they want to do, they put that in the program and just let the program execute the trade, right? And it is this that halfback of the range coincides with the previous one is just it is a nuance to me. It is worth to notice what may happen here. I will monitor what happens here. Okay, good amount. Now, what happened when we have short covering, like we have here, is short covering weakens the market. Right? Short covering weakens the market because short covering is longs or traders having long positions getting out of the market. This weakens the market, and the market can have a breakout. I mean, this is not a trade, but the trade may be just starting here. Now, I'm not saying it's going to break right away, but the direction could be to the downside. Notice also how here the low, today's low or yesterday's low was exactly at the 50 moving average. That's a 40, 65, really close. It is a couple of hundreds away, but you, for, for practical purposes, it is 50. It is the 50 to me. Okay. Oh. So this low is not good. It cannot be seen here because this is a non-adjusted contract. You can see all the contracts here. so they just overlap to each other. But yeah, to me there's a weakness in this law. Okay, we have an excess. We're going to see that in the next time frame, which is the intraday. Okay, some of the pressure has been removed, but the market, remains weak. Now, what's happening in the intraday? Let's keep zooming in, right? Market has become really short. Market has become really short. Market is really short now. Inventory is extremely short. I know we got this overnight. This overnight extremely short. This day extremely short. Very prominent overnight POC here. Um, Downside continuation here. This was a good trade here. This is a breakout trade from the daily and weekly time frames here. But that's just the beginning. There could be downside continuation or breakout rejection. Market is out of balance now. When markets are out of balance, it is when can give us good opportunities, either for downside continuation or breakout failure. Okay. Um, we were talking we were talking how the trade was conducted yesterday, how market started, and this base was extremely low. I mean, weak, coming from hard back, and you got another one here and another one here. This one, laggards. This is when laggards start to appear in the market. Remember? Now, always try to be aware. Always try to be aware. If first identify the trade, what the market has done, where the market could be, what the market can be doing, where is the pressure directed to, okay, or what is the potential. We have identified from our weekly, monthly, and daily time frames charts what could happen, right? We have seen the breakout. The late majority stage of the trade, I think, could be taking out the 17-day range. You know, remember the daily. But this is the late majority taking this trade. Okay, and laggards start to appear maybe here in this stage. Now there were signs that the break was getting weaker, and then finally, and the opposite side, the opposite trade now could be start. You know, inside of the trend, inside the downside trend, there's another trades that are against the trend. You know, there was a lot of buying here. I hope you have noticed this. There's a lot of activity around this area, the 4170, right? And having this one, this put high here, having this put high here, and having the base of the spike, the break exactly at halfback, it targets that. This is the target. Right? This could be the target. Innovators here, you know, um, up here, I believe up here or above this, we got the laggards of this trade. Right? Can you see this trade here to the upside? And the overall trade, the other one, the laggard stage is this one. You know, laggards are here are entering the market here. When the innovators and early adapters, early majority, and late majority are getting out of the market, they're taking profits, rebalancing, hedging, or whatever. When these guys are getting out, the laggards are getting in. You can see, right? You can see short covering here and then being squeezed here. Although this inventory here from last night is being squeezed to the upside now. We have big formation here, trap very similar to yesterday. But the difference from yesterday, it was already very extended to the downside, very extended to the downside. Now it's having upside continuation, upside extension. Okay, and another trade. So always thinking, if we think on trade, when we start stop following price, when we see the market and when we use market profiles to see uh, the information the market is giving us, we start to see the market, just in a different way, right? Not just market going higher, market going lower, market going higher, market go lower. No, it's that we can see something else. It takes time until we change our mind, we change our mindset, and we change the way how we see the data is being accumulated and organized through market profile. I am not a market profile trader. I just use market profile to see data the market is giving us. But that's just market generated information. It's the same thing. The same thing that I can see here is the same thing you can see on your daily or intraday or candlestick charts or whatever, right? Most people, most traders, I have seen this multiple times. Most traders just use this, use 5 minutes. I mean, short-term traders, right? Use candlestick charts and put a lot of studies here. I don't know. Uh, let's put a. I don't know what the heck it is, but this is a study. Whatever. There have other studies here. Um, look at this. Look at this. This is a 30 minutes, 30 minutes chart. Bar chart. And look at this. How different is the information being how different you see the markets. We're using the same information, right? What using bars, okay? This kind of bars, and there's a lot of debate around this because um, most people want to see where the market, but I don't see where the market open, where the market close, when this period close. But really, it doesn't matter. Okay, it doesn't matter. This is not relevant. Then this kind of charts filter a lot of information. You can do this by hand as well. If you don't have, if you don't have maybe the capital to have this kind of software, even though there are some chips as well. Sierra, for example, has some good charts for only $40 a month, something like that. And you can do this by hand as well. Just draw the low the period, the high the period, each day, each period, and you will start seeing, when you contrast, we compare with previous ones, you will start seeing there is something there that you don't see, that we don't see through if you use charts. When we use 5 minutes charts, especially 5 minutes chart, which you just there is just too much thing there. We are so zoomed in that we just lose. We lose context. We miss what's happening. Okay, if I got, and this is not this is the 5 minutes. Okay? If I got the 5 minutes, it is just too much here. You know. And yesterday, for example, now when the market was doing this, there is when you start to see this, okay, upside, you're just so zoomed in, so focused here. that we lose perspective of what is happening, and that's the danger that brings to some. Now, what is happening now? Going back to where we start, right? The overnight. I am very focused in the very short term in this low here. Market making this low. Coming the market coming back. I notice also where this low is, K low, where this one is. The market is going to open inside previous day range. Opening inside previous day range, advertised chop. Chop is very expensive. I am going to remove these things because there's just too much here, at least for the moment. Notice how, okay, notice how these lows are here. Come on. Alright, I'm going to leave those ones. We are just a couple minutes from the opening. This could be a trade here. But this could be mislead. This could mislead many traders here. Remember, these shorts are underwater now. Most of this high would be repaired. This high would be repaired as well. Um, the first thing the market can do is do a counter action to the overnight, to the 100 overnight short long inventory, and especially the immediate destination could be this low here, this weak low. It doesn't have to happen right away. Okay, it doesn't have to happen right away. But this low, I don't like this low at all. I have market also that's very close to the 17-day range. I suspect that there could be something here also, some back and forth around this level, because it's a breakout. This is a breakout trade, or it could be a breakout rejection. It doesn't happen when we have these breakouts. It doesn't happen. Usually doesn't happen right away. And notice where the market is right now. It's back again at the 4100. It was used as a support before. It was used one, two, three, four. Finally, the market took this low out, and what the market is going to do now, I don't know. I'm not saying the market is going to break. There's potential for short covering here as well. Now, if the market doesn't care about the short inventory, that's another sign as well. I'm going to remove all of this and just leave yesterday. I don't want too much data in my charts. It's taking too long to upload this. I don't like when that happens. There's a lot of shorts here from yesterday, from Tuesday, from Monday. Okay, 4100. What's happening with the let's see what happens with overnight inventory. Market was bought, right? Market didn't care about the overnight inventory. Okay, market has come back. And notice where this opening is. This low, this weak high has been repaired. This one, this it could be still there. I'm going to leave it there for a little bit. Okay. My main focus is halfback here. Notice how halfback is also overnight halfback. Could be an important reference here. Now, an opening inside previous day range, advertised chop. And the closer the market opens to halfback, the higher the odds of chop. the higher the also the having a rotational market, it seems like we're going to have a counteraction to the overnight inventory being too long. Market's having that. Let's see. I am not short, no long here. Uh, the potential for a short squeeze here is huge. Right? But I believe still there are some, some naked put sellers that are praying here. The market to go above the 4100 or maybe to still be above 49. You know, things like that. Hey Alexis, I'm sorry, brother. I just got your message. Alexis BHVS. How are you, man? I apologize. I was just for focused on the market doing my review. My review. How about you? Where are you from? Where are you from? No, where? I guess you're gone. All right, sorry. Okay. Seems the market doesn't care about the overnight inventory, at least for now. Remember this. Okay, when we have this again, you know, this is watching, having having another view of the market. You know, if you are short, if you are cut short, you are shorting the market yesterday, shorting. If you are short, what do you do? If you are, suddenly the market opens, oh my God, where I am. I am well underwater. What do you do to cover your short, right? What is what is the thing that you have to do? You may have a margin call. You may meet the call or do something. The word in the street is not to meet the margin call, close the position. Right? You don't meet margin calls, you close the position. How you close your position here? How you close your short? If you short the market here, and the market is way up here today, what do? You buy, right? To get out of the market. That's you know that could be the buying that kind of activity can be happening, and not just that. There could be new money buying here. And notice uh, right away from the opening, this is the lowest volume the market has in the last 10 days at the opening. All I know is 10 days because I can see only 10 days here. Right? I can see only 10 days here in this chart that I always have there. That's not a good thing for anything that may happen today, right? If the market is going to the upside, that's not a good sign. But that's how always things starts, because nobody, everybody saw the market going lower. Of course, the market is going to keep going lower. Now I can load my charts. I wanted to see the opening, kind of like really fast. Why I did that? Why I did this? Because one of the possible trades to me would have been the market, completely ignoring the overnight long inventory like it did at the opening, but it didn't have conviction from the opening, right? It could have a squeeze, keep squeezing the shorts, the market keep going high really fast. It didn't do that. That's why I remove all of this to not to allow my server, to remove some weight from my server so I can upload faster when new data comes in. This profile is closed now, and then another one is opening. What do we have from yesterday? From my histograms for the histograms. All right. I have noticed something yesterday as well. These highs here, I guess I can have a better look here. And this histograms, this was better. We got this. Where it is? Where it is? It's up here. These highs, this high. Yeah, we got one, two, three, four, five highs here, multiple highs. And I don't think, I still think there's a lot of shorts here from this area. This level, this breakout, this bar took these highs out, but I, I don't think that's enough. It did not have upside extension. Look at it. There's nothing here. There's potential here for firecracker effect here in this area. I still think that there are good amount of stops here in this area. Yesterday, the market looked above this high, and that high is uh, this high. It didn't have upside continuation. Higher pressure was just rejected there. Now we do have just a moment. Let me pull some charts here. We do have a breakout below the 4140, the 4180 in the weekly, which is support. Market looked below. It has looked below. It has come back inside this range, inside this 4 week range, 3 week range here. It has come back inside. The market is now inside this range. This potential, can you see the market is going to the upside? In the monthly, it's going to the downside. In the weekly, going to the downside for a longer time. 1, 2, 3, maybe 4 days now in daily. Okay, that's how you see what other time frames might be doing. Sorry, Alexis, I miss your chat, brother. I guess you're gone now. Please, if you're still there, just let me know. You have any questions? Please just let me know any question, comments. I would love to hear anything from you or from anyone out there. I do this stream as a way to keep my focus in the market. It's intended for educational purposes only. I don't call trades. Uh, if you have noticed, I don't call trades, and my view, my form, the way how I see the market is way different than other people. There's not too many people that trade the way I I do. Gold is falling. Wow, gold look above 2000 and is having a big break now. Bonds have closed the gap. I guess catches my attention from the other markets is is crude oil. Crude oil has just come back to where it was before the Saudis announced oil cuts productions and production oil cuts, oil production cuts. Whatever. My grammar is not that well. Uh, yeah, kind of, and that I mean, when crude oil prices go lower, especially with the prospect of summer coming, I think it has a lot to do with GDP, right? GDP now, if you have seen now, you will see the number GDP. two things. Jobless, and this is just weekly. It's not the monthly. The initial has decreased, and it's decreasing, right? And GDP actually, and there was a miss. I just expected it was though 2.1. Um, it's still increasing. It is still increasing to 1 point something, but it was a miss. Right? I guess the expectation was 2. So the economy is slow in there. Let's see what the number was. Tuesday GDP consensus was 2, forecast was 2.3, actual was 1.1. Huh. Oh, come on, I'm looking at Japan. Oh, no, no, my bad. That was it. I got my I got my information from two sources. I have Trading Economics if I want to see the number, or an Econoday. If I want to see more, I got another calendars, earnings calendars, who is reporting and when, an overall market calendar from my broker here. If I want to see, for example, what calendar is for next month, I got everything here. And just have, for example, May. Is this May? FOMC on Tuesday, next Tuesday. Position minutes release Wednesday. Okay. There has not been a downside market, a gap that has held in this downside movement yet. All the gaps have been closed. This high is not that good selling from overnight high. It's a weak high. Hmm. I miss this movement. There's a big print here. This is a really big one here. I don't know when this appear. Oh, it's the 4100. Okay, never mind. But I didn't see. I missed if it was printed when the market was going to the upside, or if the market was going to the downside when that happened. Now, how many times have you short the market now? By now, how many times have you have been long? How many times you have been short now? Yes, the market could spike, could be directing this spike here. This one is gone now. This is gone. Volume just dry here on the upside. God damn it! I miss this map. This is location, right? You got a trade. This is a fast trade. You got this trade. Market get close to high. Volume is decreasing. Volume decreases here. You can go. short here, and as soon as the market come back, or you can put your stop just one tick above, above uh, overnight high. What I am interested in is in that spike low, the low spike at 40.89. It's very close to the weekly breakout range as well. Right. All right. For those who ask, this is Windows Trader. Let's come back around above that big mark, 4100. You can see that I'm looking to the downside, right? I'm waiting. I'm looking to the downside. But the shorts now, the short is getting risky now because the market is very short. The overnight I mean, the short inventory in the market is very high. There is a lot of short inventory. When that happens, the odds shorts being squeezed are also there. Some shorts are being squeezed now from yesterday's from yesterday. Uh, the ones that sold the market down here. I started from this level here. Now you can see the market. You can see the market chop chopping here. There's a lot of chop here. You know, we know we know that the base of this spike from the overnight after news release, right, is weak. It was bottom. This market was bought from it started from yesterday's half back, and all of this inventory is also long. And now I know as well that we have tremendous amount of inventory here. This was a day with huge volume here. Remember, this day we have huge volume. This was the day when we have First Republic Bank reporting earnings. That was the catalytic the market needed to remove all these longs here. Most of these longs, you know, and we saw these longs throwing the towel here this day. We have not seen these ones yet throwing the towel. These are still, I think, these are still here in this market. There could be, I know, I am doing, I'm saying, I was saying they are here as a statement, and that couldn't be uh, much far from reality, right? Because nobody knows actually what's happening. Uh, Sometimes I do that, and that's a mistake. Okay, you got questions, comments? I would love to hear if you have anything to say. The thing here is now traders had in these days, right? That here, here, traders are get used to short now. They're short, they're the bears, the traders that like to short. Finally, right? Finally, the market is breaking. This is I am going to recoup all the losses that I have had uh, the past 2 months. And they may be short in the market again. And that maybe they keep short in the market. I mean, that could be the right trade in the right direction because the trend now is to the downside. So the direction is the trade or the trade is to the downside. Or they need to have patience of. Or you need to see what the market is doing, what the trade can be here now. For example, right? We have identified two potential trades. One is this, the low, the very specific one, the market taking the low, the spike. The other one, market closing the distribution from yesterday because of the potential of having a lot amount of stops here in this area. Because I don't think this is enough to remove the shorts from this area. All right, this high was weak. Market has come back to that. Let's see if it repairs and comes maybe around this area. But what about if the market is sold again from this level? It will add another layer, right? It will put more stops up here if the market is sold. The closest the selling happens to this, the more the stops are going to be in this area. We have one high here, another high here, another high here, non-excess high here, weak high here, and market high made in the overnight session. End of the month tomorrow. There's a lot of things that can happen here. What happens if the expected thing doesn't happen, right? This is not the case now or today because the market is too short, right? But for example, if I was expecting this low to be taken at the opening, what happens if that doesn't happen? These kind of lows, spike low, made in this market that already has this trend, it's very different that the market has the same type of buying here, for example, right? In this area. All right, these highs have been taken. There's tremendous amount of shorts here in this market. That plus the trades that keep shorting the market just because the market was going lower, you know, they couldn't short. They couldn't short when the market. They were shorting all the time when the market was going higher. And now the market went lower. They couldn't. They couldn't short the market because they were being stopped out so many times that now when the market shorts, when market breaks, they don't short. And now that the market finally is maybe might be starting a new movement, a new action, they keep shorting or they start shorting. They start fight the market, at least in the short term. And those shorts from yesterday, from before yesterday, the inventory that is there, that is short, plus the traders that are short in the market can be the fuel the market uses to rally. I still didn't do anything here. And I got those two trades there. So which one is going to be first? I don't know. I don't know. Nobody knows that. What are the odds? One happening over the other one, over the other. Wow, gold is having a big break here. Contradicting information around gold breaking, crude oil breaking, bonds remain on range. I think there's a lot of manipulation on bonds as well. The 4100 is also the opening. It, I, I think I mean, traders, you can see the traders are using the 4100 as a reference, but there's nothing there. There's nothing that to be used in that level to be used to be used for reference. There's nothing there. It's just a round number. Have you seen how traders are using are selling the rallies? No, you could see the traders selling the rallies yesterday, and now the traders are selling the rallies as well. Did you see when the market get to overnight high, and the market was sold from that level, and now the market is being selling, is being sold from yesterday's high, really close to yesterday's high. You know, that you just get to there and then boom, selling camps. They're trying to do the same thing that they did yesterday. They just do what works until it doesn't work anymore. There's a report of home sales that just came out very negative. Expected was zero, and the number was -5. This is what I'm talking about. I'm going to remove these references. And you can see here, for example, how there's a big volume here. The market took these highs out, was one, two, three, four, five highs out, but it didn't have taper here. It didn't have where can I see taper here? Even this could be taper, right? High volume goes just decreases. This is not taper. This is tape on the lower side, tape on the upper side, right? So there's still a lot of stops here. And not just stops here, but more volume here from yesterday. And the firecracker potential here. So the next reference in the upper side is market taking this high out, and after and if the market takes this high out, if the market takes this out, it would mean that there is no more downside trend. The trend to the downside is over, right? Taking this high out. And the next thing, monitoring for upside continuation would be closing the distributions. If the market closes the distribution, the immediate target is the opposite side. Right? This upside becomes the destination, the ultimate destination of that trade, and monitor for continuation, potential for firecracker effect up here. That's the upside movement. I'm not saying I'm not saying that's going to happen. I'm just seeing, what can happen. I am playing with the imagination here, which is something important, you know, because if you don't have that, you will just following price. No, what is the trade now? What the market is doing now? I don't know what the market. I don't have clear evidence of anything here. We have volume is not bad, right? Volume is has decreased, but not that much. I thought it was going to be we were going to have even lower volume. This could be maybe 2%, something like that. So it can easily go higher here. Let's check how much volume do we have. Oh, we have, yeah, minus 2%, minus 1.94 actually, if you want that the full number. Now, now look at this. Stops from here, high here, one, two, three, four. So what are the odds of this high to be to remain like that? And see, the odds of market taking that high are very high. Now, the thing that I don't like is, you know, market is going lower here. And I don't like this kind of volume. I would like to have something like this, right? Not able here in the lower side. Now the thing is, do not look for things that go against what I want to do, right? I try to be aware of those things, but my main objective is what the market can do. What are the things that favor the movement. If the things that are against of the movement are extremely more weight, or overweight or overweight, the things that are in favor, that's a sign, right? That or I could use that to say, okay, if I do this, my risk is high. The risk of having a losing trade is just high. This also could be a market that has getting too long. It's very long. So 40.89, that's 40.90. Any comments? Please, I would like to hear something, from somebody. That would be really nice. and not just something being, agreeing with what I say. Right? Of course, Now, breaking from this level, if there's a break here, this kind of highs actually limits the potential that the damage the market can do in the opposite direction, just because this high here. Yes. What do I do here now? I see the potential of the downside trend. All right, I see the weakness of this movement to the upside, but also I see that there is tremendous amount of short inventory in the market. Two contradicting uh, opinions there, two contradicting pieces of information. And sometimes when we have this cognitive dissonance, it is just two different time frames that we are seeing. What we are seeing is two different time frames. Now, what it is above this, the immediate thing is the stops here. The upper side, we have seen the range half back. We got remember the range from I guess was from February, and the range from this 17 and the half back of this 17 range coincide. They match, they overlap each other, and that could give some weight to this level here. That half back is this level 41.32. I was looking to the downside, but this high says, oh no, that trade is too risky. The low I have from the overnight tells me that the long is also risky. And the thing is how do you plan around that, right? How do you organize yourself around that? At least if you were not aware, now that you are aware, you know you're taking the risk you're taking. Right? So you may know if your trade doesn't work, if you any trade you place now, it doesn't work immediately. Now you know that the reason that what could be behind that. That can give you some confidence as well. I don't I don't like this rally here. Even though the odds it has good odds, right? Because of short overnight inventory. My bad. Because of the short overall inventory the market has. And the potential for a short squeeze if they have not been squeezed already. And on the Mondays tomorrow, and another thing we have is Amazon. We have Amazon today. What the market was doing, what the market did yesterday with Meta. We have, I don't know what the report was with Meta. We have with huge spike to the upside in Meta, right? What happened with Microsoft? Google. Google spikes to the upside. What is going to happen with Amazon? Oh, we are going to have another spike again. Because that's what the market is doing, right? Okay, when you start thinking that way, you need to stop. We need to stop and just look at ourselves, right? Because markets are completely random, right? That's what gives us an opportunity, the randomness. You know, the easily the way how these markets are exposed to random events around the world as well. Just because Meta and Microsoft or Google have taken the market higher when the release happened, it doesn't mean that now that we have Amazon at the close, is the same thing is going to happen. Okay, but traders quickly get used to things, right? And traders do what works until it doesn't work anymore. Now let's put a line. Let's put a line here. Let's use a line. Well, that line is. What do you see here? What do I see here? Is this overnight POC? I mean, this, yeah, what is this? Wednesday, Tuesday POC. Many traders see this, but it is just too far back from to be of relevance. Right? It is kind of close to today's hardback. However, it's not exactly close. What is the volatility? Volatility is below 18 again. Okay, Mike is getting too confident now. Okay, we made a low. I didn't like the way how this low was made. There was a lot of volume here and this low, and at 47 here. There was just too much, too high volume here. There was not clear rejection. The market gives excess here. Now the high has been taken. Today's high A has been taken. This high has been taken. Let's see the market can close this. Yeah, that's short covering. And this is how slow do everything happen. Okay, that's short covering. The way how this is happening, that's short covering there. Let's see the market can close the distributions there. Mm. That's yesterday's short strawberry the towel there as well. All right, that's good. Shorts. Those stops, I think those stops are clean now. The trend to the downside has, yeah, there is no more trend to the downside. I want to see if these higher prices are accepted or if the market rejects these prices. And remember also, this break happened on news, right? This happened on First Republic Bank news. It's very narrow range. Market shouldn't have any problem. because there's nothing here. There's any problem taking this high out. The non-revisited overnight POC, prominent overnight C from this day has been taken. Remember what we have here. This one has been taken, and the high this overnight was one tick from closing this distribution as well. That's also very mechanical way to sell the market. Now, if I am long here, I don't want the market to come back inside this range. Okay. Now we are in this spot here. We are in this spot within distribution close and yesterday's high. Okay, I don't want the market taking this, getting back inside this range. Upside continuation, we see the market closing the distributions. It's not tapered here. There's good amount of volume. As I say, I don't like the low. I don't like the lows, the prints that I saw here. But that's who cares about that, right? Let's do what the market is doing. Now, if I run long, I don't want this market to come back inside yesterday's range. Why? Because of this low here, right? Because it is low. There's nothing around this level here. It's good. Everything's good. I don't use those levels to trade. Right? I don't base my trade on those levels. I use those levels to monitor my trade. However, if there is something that I am doing, I would like to see, for example, in this case, upside contention. What could be a reference to monitor? You know, once you have a trade, monitor for continuation is very important as well. Okay, it can help to reduce the feeling of the greed, emotions that we have, fear. We can help to control those fears as well. Okay, market has stalled now. We got this spike to the upside, to take yesterday's high out, but the market is stalling here. The possibilities here are if the market takes this high out, I could see potential to this high up here. It seems far, but the potential, the ultimate destination is this high. If the market takes this high out and comes back inside, the potential is to the opposite side of the range, is down here. We got last POC breakout, 17-day range. I mean, these levels are going to be used to monitor, but my main thing, the lower side, the first thing is the base of the spike. Base of the spike coming from exactly halfback. Overnight halfback and yesterday's halfback. Mhm. So can you see how market generated information can be used to monitor my trade? You have a bias to the upside. No, because of why? Because the market is going higher. It's going higher, going higher. I have to be long. You know, use this. You can use this information. You may not have, or I may not have this, may happen, no, but actually this doesn't matter. Right? I don't care. Right? It doesn't matter. Right? You can trade very well without this. Sometimes it's just a distraction. I use this to monitor changes. More than to trade, to monitor changes. If there's any change. Mm. Anything, remember? Anything to the upside. This is my expected volume. We have less than 5 minutes. Let's see if we have more volume. I don't think it doesn't look like 5 minutes are we're going to reach previous day volume. Now, like it's been bought, it's coming back. It's been bought from this level here. No taper on the upper side. Now, can we break from here now? Towards where? Towards what level? What can happen? This could be, are these loans going to be liquidated here? That would be really early in the session if the market takes this low out in the next period. But notice where the buying is coming from, where the buyer has came from. Did you see where the buyer has came from? It came back from this level, from exactly this high to the tick, right? Came back right there to that level. Who buys from that level? Oh, oh, okay. The trade was to take repelling this high, taking this high, taking the stops. That has been completed. What's next now? What do I have on the upper side that can attract my attention or can attract traders' attention? Half back here? I don't think too many traders look at this. They don't know what this is. Have no idea about this. So that's boom boom cross. And maybe March high, right? Previous month high. That could be a reference in the upper side, which is all coincidence is this day's high as well, yesterday's high, or Tuesday high as well. All right. It is 10:24. Unless you have any questions, I guess that's it for the morning. I wish you guys good luck. Good luck. Stay safe out there. Have a wonderful, have a good rest of the morning. All right. Bye bye.